So until yesterday, we have discussed about different transactions related to fixed assets like acquisitions, acquisition adjustments, depreciations and depreciation adjustments. And we have also seen some miscellaneous activities on fixed assets yesterday, like transfer of fixed asset, splitting a fixed asset, and adding additions on the fixed asset or adding the lending details on the fixed asset and all. We can also, create some remaining transactions also, like write-ups, write-downs, and revaluation of assets. So that would be the same situation. So we have already given the accounts, and you know that how it will work. For today, let us try to discuss about how we can sell fixed asset, or what is the accounting entries that will be affected during the selling of fixed asset, and how do we need to configure the posting profile for fixed asset selling. Then in how many ways we can sell fixed assets. I don't think we can accommodate all the topics in today's class, but how far we can discuss, we'll discuss today. Okay, for that, I'll take an Excel sheet for explanation of what happens when I sell a fixed asset, the accounting entries first. So when you understand the accounting concept, then you can go back and configure to achieve that accounting results. So now here I'll start something. So I would like to ask you some questions. So just give some proper answers for this. So suppose that I'm acquiring a fixed asset. Okay. Acquisition entry. So what is the entry for the acquisition? If at all I'm acquiring a fixed asset.
Fixed asset account will be debited and the cash or bank account or vendor account will be credited.
Okay, let me take fixed asset account will be debited. So let's say I'm buying it for 1 lakh rupees. Then let me take my bank account. Bank will be credited for 1 lakh itself. What I'll do is I'll just give this symbol, negative symbol, bracket, so that it will show up in the negative symbol. What did I miss here? I was guessing it should show up in the negative number if I give this. Yep. I'll also change it. I'll remove the commas just for the sake of explanation here. Okay. So fixed asset account will be debited and bank account will be credited. So let's assume that we have bought it somewhere on 1st of January. Okay, 1st of January 2021, let's assume. Then every month we'll have a depreciation entry, right? So 31st January 2021, we have a depreciation entry. Okay, so this is depreciation. So what is the entry for depreciation?
Depreciation expense account will be debited and equivalent depreciation account will be credited.
Okay. Depreciation expense account will be debited for, let's say, 5,000. Okay, and accumulated depreciation will be credited for 5,000. Okay, perfect. So again on 28th of February, I have 28th of February 2021. So I am getting the same entry, right? So again, I'll post depreciation for the asset. Again, I'll get the same entry. Depreciation expense will be debited and accumulated depreciation will be credited, and so on and so on. So this will be the regular deduction in the asset value or depreciation of the asset value on daily basis, I mean monthly basis. So let's assume that I'm going to sell the fixed asset in March. Okay, in the month of March. So let's assume that I'm selling it on the 1st of March itself. So if you sell in the middle of the March also, you don't calculate any depreciation, because you can calculate daily depreciation if you want to for that number of days that in a March month that you have used it. Or people will normally not calculate depreciation on the assets for that month in which they are going to sell, or in that year that in which they are going to sell according to Tax Act. So for 1st March 2021, I'm going to sell the fixed asset now. So before I sell the fixed asset, at the month during the month of March 1st 2021, what is my net book value of the asset?
90,000.
So why? So this should be negative, right? Yeah.
Accumulated depreciation should be appropriation with fixed asset.
We'll see. So my net book value will be 90,000 as Sairam and Sushila said because I bought the asset at 1 lakh. But however, I have depreciated it and the same asset I have depreciated it for 5,000 and 5,000 for 2 months. So the net book value of the asset will be like 90,000 at the end of March. Okay, clear for everyone until here, all the steps.
Yeah.
Yes.
Okay,
Yes, JP.
perfect. Then give me a second. Let me plug in my charger and then continue with the concept again. So net book value will be 90,000. Suppose that if I sell this fixed asset at 80,000 on 1st of March, so what happens to the business?
Loss on sale of an asset.
There will be loss on sale of the asset of 10,000, right? So what if I sell this asset for 1 lakh again?
Profit of 10,000. Profit on sale of.
There will be a profit on the sale of asset of 10,000, right? So it depends on how much value that for which value that we are going to sell the fixed asset for. Suppose if I'm selling it only for 10,000, then I'll have 80,000 loss. That has to be accounted properly. Either the profit or the loss that you receive on the sale of a fixed asset or disposal of a fixed asset should be accounted properly. So let's see how the accounting has to be completed when we sell a fixed asset. I'll take you through. So suppose that I'm selling it on 1st of March as I told. Okay, sale of the asset. So what will be the entry usually I get when I sell a fixed asset? Anyone?
Cash to fixed asset or bank to fixed asset.
So Sairam says bank account will be debited with, so let's say I'm selling it for 80,000. Okay, 80,000 and then fixed asset.
P&L.
No. We'll be back. Wait a second. Fixed asset account will be credited for 80,000 because I'm selling a fixed asset. So when I sell it off, fixed asset will be created for 80,000. Bank will be debited for 80,000 because I receive 80,000 into my bank. So where is the P&L account or the revenue account that we are talking about? I mean, sorry, the loss account that we are talking about.
No, generally we use compound entry for this, right?
So we use a compound entry. It will be an automatic entry. I'll show. So what do you guess would be the additional entry for this? Any guess?
Loss on sale of asset 10,000.
Where you will accommodate here? Let's say.
1 minute.
Okay, loss on sale of asset. Okay, so loss will be always debited. We know that. So debit
10,000.
10,000. Okay, so this is a credit, right? Fixed asset amount.
Bank is
So
90,000.
by bank 90,000. I am only receiving 80,000 into my bank. Correct. So I am only receiving 80,000 because I'm selling the asset for somebody for 80,000 only. Why will I receive 90,000 into my bank? Only 80,000 I'll receive. There could be something else. What it could be? So until here entry is okay, but this is additional debit. So what is the credit for this additional debit?
P&L account 10,000.
Which P&L account? This is already a P&L account.
The remaining fixed asset for 10,000 has to be credited.
So fixed asset you will credit for 10,000. Okay. So your Sairam says that he'll say that fixed asset account. So which means it will be 90,000 according to him. Is it that so?
Yes, Guru.
So if it says it is zero now. So voucher is balanced, sum is zero. So is this correct? Sairam,
No, actually,
yeah,
we are
Sushil.
selling the asset for 80,000 only.
Mhm.
So we have to accommodate this to any other account.
Well,
So
Accumulated. Sorry.
well, good guesses anyway. I'll come to the point rightly. So all of you are near to accommodating the sale entry. Let's see. So this is what we have in place. Okay. Now let us see about the trial balance effects of from the beginning to the end. Okay. See, when you are selling a fixed asset, you should not have anything related to that fixed asset in your books except the profit and loss details. Okay, the balance sheet items, everything has to be reversed completely when you are selling a fixed asset. See, you have bought the fixed asset. When you bought the fixed asset, the fixed asset account is debited for 1 lakh, right? So let me mark it in yellow. Fixed asset account is debited for 1 lakh when you are buying a fixed asset. When you are selling a fixed asset, it is created for 80,000, but there is a 20,000 difference. See, when the asset is gone out of business, this entire 1 lakh should be reversed, right? So there should not be any balance in the fixed asset at all because the asset is no more in the business. So why will I again have any balance like 20,000 difference in the fixed asset? Got my point, guys?
Yes.
Yeah.
So it is correct, right? So we are selling the fixed asset off. So we should not see any more fixed asset balance in the books or in the trial balance existing in the balance sheet because we don't have that asset or don't possess that asset. So that has to be reversed. That 20,000 completely has to be reversed. Okay. So that's one point. Let's keep it in mind. So fixed asset remaining balance is, just write it clearly. Fixed asset remaining balance is 20,000. Okay. So I'll also paint it in yellow so that you can link them. Then so we have this accumulated depreciation account like 5,000 and 5,000. So let me paint it in another color like in this green. Accumulated depreciation. Accumulated depreciation is also a balance sheet account. So accumulated depreciation is 5,000 and 5,000. See, you are selling the fixed asset. At the time of sale of fixed asset, whatever the accumulated depreciation that you have calculated until then will get reversed entirely. So that's the correct practice that normally businesses follow. See, you have calculated accumulated depreciation of 5,000, 5,000. So what the point is that whenever we are posting depreciation to the fixed asset, actually here you should get the fixed asset account, right? Depreciation expense will be debited every time, and you should actually get the fixed asset account here because that has to be deducted from the existing fixed asset balance whenever you depreciate an asset. But instead of the fixed asset account, we are using accumulated depreciation account as a intermediary account for the time being. As long as you possess the asset, you will use this as an intermediary account. But when you sell the fixed asset, this account will get reversed and this have to become zero now. So this accumulated depreciation account, which is holding a balance of minus 10,000 or a credit balance of 10,000 in the balance sheet, should become zero now because it is related to the fixed asset that you have sold and you don't have to have it anymore in the balance sheet to be representing against that particular fixed asset. So now I'll just write it here. Accumulated depreciation total. So how much it is? 10,000 in a credit balance. Okay. So I'll also write it here with green color so that you can link it up. So in the balance sheet, whatever is remained, I'm showing you. Okay. Fixed asset account is debited with 1 lakh and credited with 80,000. So there is a remaining balance of 20,000 on the fixed asset. Okay, fixed asset remaining balance I have here as 20,000. Coming to accumulated depreciation, I have 5,000 and 5,000 negative balances in the balance sheet. So that is accounted as totally 10,000 minus 10,000 or credit balance of 10,000. Okay. Then bank account, let's see bank account. So when you are buying a fixed asset, so you will have your bank balance of bank being affected with 1 lakh or losing 1 lakh. Here you are getting only 20,000. See, your money is gone from bank of 1 lakh when you are buying fixed asset, and when you are selling fixed asset, you only got 80,000. There is a difference of 20,000. So where that 20,000 is gone?
And for 10,000 for depreciation, 10,000 is a loss.
Correct. As Sairam
Depreciation
said,
should be adjusted to
depreciation expense until now, whatever is calculated on the fixed asset is a loss to us. Let's say loss. So I'll paint it in red color. So in this color, maybe depreciation expense. So whatever the depreciation we have accounted on the fixed asset until now is a loss. So the difference between the bank account is 20,000, right? So out of 20,000, 10,000 is deducted already. So there is another 10,000. So that 10,000 is again loss on sale of fixed asset. This is loss on depreciation of fixed asset. That will be loss on sale of fixed asset. So let's see how we can note it down or account it. So then I can write it here as loss on sale of fixed asset, which should be debited. I should get it as 10,000. So debit value, right? 10,000. Okay, we have accumulated depreciation of 10,000, which has to be reversed. So this is in credit earlier in the balance sheet. This has to be debited now. So what I'll do is I select this accumulated depreciation account here. I'll debit it with 10,000. Okay, this is also getting reversed now according to our requirement. So then you have two debits. There should be a credit for 20,000 for the two debits that you are doing. So what will be that 20,000 credit?
Fixed asset account.
Yes, the only account that was remaining here is the fixed asset account. So I'll show you this one as well. Fixed asset be credited with 20,000 of reverse balance. So this is how it is. So now when you see them clearly, fixed asset account was acquired for 10,000, sold for 80,000, and there is a deduction in the fixed asset account. One is a loss and another one is depreciation. So you can see it as accumulated depreciation. So you can see fixed asset account is totally becoming zero now. So completely fixed asset is not existing in the balance sheet at all because you have sold it. Out of which earlier it was bought for 1 lakh, which you have entered in the balance sheet as an asset for 1 lakh. And when you sold it, 80,000 is deducted as well as this 20,000 also deducted automatically. So instead of fixed asset account, until now you have used accumulated depreciation account for the depreciation purpose. Behind the fixed asset account, you have accumulated depreciation account, right, in the posting profile. So that will get reversed again. So entirely that how much ever the fixed asset depreciation you have calculated until now, it will get reversed up to total amount and that will be accounted to fixed asset. So you will get this entries value, sell a fixed asset. Now when you see it, fixed asset account is becoming zero, as you can clearly see. 10,000, 80,000 and minus 20,000. So it will become zero sum. And when you see accumulated depreciation account, 5,000, 5,000 and positive amount of 10,000. Credit, two credits of 5,000 and one debit of 10,000. So it is becoming zero in the balance sheet. Now what else we have? Bank account, 10,000, sorry, 1 lakh bank account credited and 80,000 debited here bank account. So there is a difference of 20,000, which is 20,000 difference is there. So that 20,000 is this one, loss on sale of fixed asset and accumulated depreciation on fixed asset. So these two are that 20,000 actually. I'm sorry, I should pay it in red maybe. Yeah, loss on sale of fixed asset of 10,000. So this is 20,000, right? So this is a loss to us. If I would say complete loss, depreciation, or you can say, or you can leave this accumulated depreciation if you want, or you can say that this loss on sale of fixed asset is a loss, and this is a loss, and this is a loss. Both profit and loss accounts, you have depreciation expense and loss on sale of fixed asset. 5,000, 5,000 and 10,000. Completely 20,000 is a loss to you. That is why you have a difference in your bank account in the balance sheet. So that is the concept, guys. Got it, or any confusion, or do you want me to repeat it from some point? Sairam, what say?
No.
What no?
మళ్ళీ వస్తుంది.
Okay. So Sheila, what do you say?
Yeah, understood.
Okay. Saideep, Santosh.
Yeah, bro,
Clear
it's
GP.
clear.
Okay, wonderful. If this is clear, then you can easily understand the configuration as well as the process too. So if you want to achieve these results, you have to configure posting profile of fixed assets in such a way that these results will be automatically generated. So let's see how we can configure the posting profile to achieve these results. So I'll share this screen to you after the class, so you can remind me. So until then, we'll also make some entries here, don't worry. So I'll just take you to the legal entity MRF. So for fixed asset module into the posting profiles, which is under setup always. Give me a minute. Okay, so now we have two concepts, sale and scrap of fixed asset. Coming to the scrap, I'll come back to that point of scrapping a fixed asset. Both are same, just that on sale you will have some amount, or on scrap you don't really have any amount. So I'll come to sale first. Okay, for sale of fixed asset, here I can configure a main account. I can select which book I'm going to sell. I'll say Companies Act book. Which asset I'm going to sell, which group, I can select a group first, then vehicles group, then main account. The main account that you have to give here is gain or loss on sale of fixed assets account. So I'll just create that account. So why we'll give that account, I'll again show you. So I'll take some account of 6 series. It's like one maybe. Gain or loss on sale of fixed assets, which is a P&L account. Okay, it can be gain or it can be loss sometimes. So I just give it as profit and loss. So that's how I just gave that account. I'll go back and assign the same account here, 6 lakh 1. Okay, in the main account for disposal sale. Offset account, I'm not giving anything because I will give my own account like bank account or cash account whenever I sell a fixed asset, right? So I'm not giving offset account. Can select tax act book as well. So select the group, select the vehicle and go for the same account 6 lakh 1 for the tax book as well, but we have to do the sale entry for both the assets. I mean, both the books separately, not at a time we can do it. No, we can't do it at a time. We have to do it separately. Okay, now then the most important part is the second half of the posting profile. You have a separate posting profile again to be configured for the disposal of fixed assets. In the disposal, we have two things called as sale and scrap. Okay, as I told you, I'll come back to the point of scrap again. So for sale of fixed asset, you have to configure the accounts here for the automatic reversal of the transaction. So we have talking about this achievement, right? Automatic reversals. So we have to create posting profile in such a way that we'll get that entries. So for that, we have to add something here. So you can select the book, which book, Companies Act book first. Okay, which group you want. I will select the group, vehicles group. So here it is. What do you want to reverse? So I want to reverse the depreciation that is calculated in the previous year and the depreciation that is calculated in this year. So depreciation of this year as well as depreciation of previous years. Okay. First I'll select depreciation of previous years here initially. So here I'll select the accumulated depreciation account. There is this accumulated depreciation account here in the main account. In the offset account, I'll select the fixed asset account, vehicles fixed asset account. Fixed asset vehicle account. So normally we want the accumulated depreciation to be debited and asset account to be credited, right? Whenever depreciation is being reversed. So here in this situation, accumulated depreciation is being debited and fixed asset account is credited for the reverse of depreciation that we are talking about. So that is what it is here. So that is for the depreciation of previous year. Now we will create one more for the same Companies Act book, same group, same vehicles, So this time I'll give depreciation of this year as well. So most of them will not prefer to reverse the depreciation of this year because they don't have any accounted depreciation for that year. Maybe situations will be there where they depreciate a fixed asset on a yearly basis, so they don't really have any depreciation for that year. If you don't have also, if you configure, there is no problem. It won't reverse anything if you don't have anything for that year. Then here I'll have 1,60,000. Same accounts I give here for depreciation previous year and as well as depreciation this year, which combinedly makes the consolidated or accumulated depreciation that is calculated on the fixed asset from the date of acquisition to till date that you are selling it. So all the previous year's depreciation as well as this year depreciation. Maybe the asset might have been bought or acquired in a some other year or 2-3 years back. So that is why we give this one here. Then what else we have to give here is that Companies Act, group, vehicle, and we have net book value that has to be reversed when we sell a fixed asset. So in the net book value, the main account that we will give is 1,60,000, and the offset account that I'll give is gain or loss on sale of fixed asset. So this is one thing that you have to buy hard maybe. Gain or loss on sale of fixed asset, I give this side, and this account I'll give this side. Just to reconfirm, let me duplicate this and take you to another company. So this would be the same that I have given there. Fixed asset posting profile in ADS. Go down. So come on, vehicles, contains vehicles. Okay. So I gave depreciation adjustments also because depreciation adjustments also falls into depreciation, right? So that also has to be reversed. So along with the net book value, I can give depreciation adjustments as well. I'll do the same here as well. So I'll add one more, select Companies Act book, select group again, select vehicle, select. We can see all the transactions that we have done for the assets. You can reverse entirely all of them, but that's not our agenda. Our agenda is to achieve what we are looking for. So depreciation prior years I select here, depreciation adjustments prior year. I'll select the same accounts. What I have selected for depreciation, I'll select the same. 1,70,000 as well as 1,60,000. So this is the same accumulated depreciation account to be debited and fixed asset account to be credited. Okay. And then I'll create one more for cash book and then group, then vehicle, then depreciation adjustments this year. Okay. And then I'll select same account here, accumulated depreciation, and here I'll select the same account, 1,60,000 fixed asset vehicle. So this is how. So for vehicles, you are selecting fixed asset vehicle account. Normally for furniture, you will select fixed asset furniture account here in the offset account for this entries, depreciation adjustments here. So key things are this that you have to remember configuring these accounts. Okay, for depreciation and depreciation adjustment, they are the same accounts. Accumulated depreciation will be in the main account page, and on the offset account we have the fixed asset account. Coming to the net book value, so you will give the fixed asset account in the main account in the debit page, and the offset account as the say gain or loss on sale of fixed asset account. So here also you have to give the same account in the disposal sale main account as gain or loss on disposal of sale fixed assets account. Coming to here, we'll have this account as gain or loss on sale of fixed asset account. I think that should be the thing as far as I see. Yeah, accumulated depreciation and fixed asset account. Okay, coming to net book value, it is fixed asset account done. Then the gain or loss on sale of fixed asset account. Perfect. So this is how we can configure the sale posting profile of the fixed asset. Now let's see how we can use this posting profile and sell a fixed asset that is existing in our business. So I'll change this back to MRF again. So in this, I'll go to the list of fixed assets that I have. Fixed assets and fixed assets. Let's see one of the asset that we would like to sell. I would like to sell one of the asset called in which we have done depreciation, like this one, Benz truck, right? Or we'll go for this one, Ashok Leyland truck. If I go to valuations of the Ashok Leyland truck, say according to the Companies Act, we'll just look at it. 2 lakhs is what I have bought it for. Okay, I have calculated a depreciation of 1527.80 until now. So the net book value of the asset is 1,98,472. Okay, I want to sell it for 1,90,000, which is a loss of 8,472, right? So I want to sell it for 1,90,000. So on the existing net book value, I'm selling it for a slight loss. 8,472 loss. So how to do that such kind of sale? I'll show you now. So clear, right? This one, the structure of the asset. Sairam. Santosh. Okay.
Yes.
Okay, to sell a fixed asset, you can go to fixed asset journal again. Normally fixed assets, fixed asset journal. So you could have created a separate journal as fixed asset sale journal. It's up to you. Since like for acquisition, we have created one journal, for depreciation, we have created a journal, right? In the same way, you can create another journal for fixed asset sale also. I mean, depends on the practice. So some people will have fixed asset common journal for all the transactions of assets, but some people will have separate journals for fixed asset acquisition, fixed asset depreciation, fixed asset sales, fixed asset revaluation. They'll have separate journals created, all with the journal type as post fixed assets only. Here I'm using the existing journal only. I'm not going for a new journal since I don't have time. So I'm using the same acquisition journal, which is a common fixed asset journal. So I'm just changing the fixed asset sales. I'm saying go to lines here. So what transaction that you're going to do here for the fixed asset?
Disposal sale.
Yeah, we are going to do disposal sale. So I'm selecting disposal sale. I'm selling it for the 1st of December or 2nd of December in the next month, because depreciation is already calculated for the month of November, right? So not good to sell in the middle of November. Once, let's assume that we are selling it in the month of December where depreciation was not yet posted. Okay, which asset that you are going to sell? This one, vehicle number 2, Ashok Leyland truck. Okay. It will take a while to load the details, name and the book. Yeah, here they are. Then you can give a description if you want to, and you can debit or credit it here. So what you will do, debit or credit when you sell a fixed asset?
Asset account will be credited.
So fixed asset will be credited whenever you are selling a fixed asset. So I'm selling it for 1,90,000. So the net book value of the asset is 1,98,000. Means I am selling it for a loss of 8,472. Whatever I have here, 8,472.20. So let's see how it will be accounted. So I'm crediting it here for 1,90,000, and I'll use my offset account as my bank account. Okay, like I'll receive the amount into my bank this way. Then I can validate this transaction. So clear this entry for all of you. Asset account is being credited and bank account is being debited for whatever the value that you are selling, 1,98,000. So like here, asset account is being credited and bank account is being debited. However, it doesn't really consider this account here, but results will be the same. So fixed asset account is credited for 1,90,000 and bank account is debited. So the journal is okay. It says that we can post it now. So let me try to post it. So it is posted. Now let's see what is the voucher that is generated. Let me go for voucher. So here is the voucher that I have. I'll select it and try to export it into Excel. Hope so it get exported. So export, download. Yeah, here it is exported into the Excel file. So now let's see what happened in this voucher. So fixed asset vehicle account, you can see here fixed asset vehicle. This one fixed asset vehicle until here 2 times you can see this is being credited for some amount. So let me try to paint it in yellow color again. So now see how much amount it is. What is the amount, guys? Total amount for which the fixed asset vehicle is being reversed.
2 lakhs.
2 lakhs. 2 lakhs is what we bought it for. So entire 2 lakhs is getting reversed here. So there will be no more fixed asset value in the balance sheet. Okay. Accumulated depreciation account. So I'll paint it in another color like this one. So how much depreciation we had earlier on the fixed asset? 1,527.80 for which the accumulated depreciation account was credited earlier. So the same was being reversed here, being debited here for 1,572.80. Then the bank account, you are receiving 1,90,000 into your bank account, right? So your bank account will be debited with 1,90,000 since you are receiving only 1,90,000 into your bank account. Then you have gain or loss on sale of fixed asset account for 2 times. 2 times means you have to consider the net balance of this, both of them. So net balance of both of them is 8,472.20, which is a debit balance excess. Means what is it, guys? If there's a debit balance excess means any idea?
Loss.
It's a loss. So you have credit here and debit here, both of them. So you have 8,472.20 as loss. So I counted properly 8,472.20 as a loss. Right? If I go to the previous screen where I was explaining, so loss on sale of fixed asset is 10,000 here. So the same way here, loss on sale of fixed asset account is 8,472.20. Okay. What I received into my bank account was 80,000. So what I received in my bank account here is 1,90,000 to which I sold the asset for. Then accumulated depreciation that is counted until now is being reversed and fixed asset vehicle account is being entirely reversed with 2 lakhs amount completely. So as you can see here also, fixed asset vehicle account is entirely reversed with 1 lakh amount that you have bought it for. In this example, it's a little typical that you will get this gain or loss on sale of asset account 2 times because that is how we have configured the posting profile as. So this it will work in this way only since you have to balance all the vouchers here. So to be frank, to explain properly, so this one and this one, these both are one voucher. So gain or loss on sale of fixed asset account 1,98,472.20. Fixed asset vehicle account 1,98,472.20. This is coming from here, a net book value posting profile actually. Here in the net book value posting profile, what you have given, this asset account as, asset account here and the offset account here, gain or loss on sale of fixed asset account. So this is being credited and this is being debited since you are reversing the net book value or selling the fixed asset. So this account will be credited and this account will be debited, so that you can see here in this Excel sheet. And in this one, fixed asset vehicle account is credited with the existing net book value of 1,98,472. That's what we have here in the asset, 1,98,472. So for that existing net book value, it is reversed here, and for the supporting account or the balancing account is gain or loss on sale of fixed asset for that voucher, if you would see. Then for accumulated depreciation to be reversed, and you have this account again. It's the same fixed asset account. So I'll give another color for this. Say this one, accumulated depreciation account being debited for reversed, right? So for that opposite account is this one, fixed asset vehicle account being credited for 1,57,080. So this is coming from here. So for all the depreciation related transaction, depreciation adjustments this year, previous year, current year, all the adjustments or other transactions, whatever you have, you will have this voucher here, accumulated depreciation total amount. Sometimes when you have depreciation in this year, previous years and adjustments, you might have multiple accumulated depreciation accounts coming here. Same account, but representing the reversing depreciation of previous year, this year and later years. So that will show multiple accounts here. But here, since we have bought this asset in this year only and we don't have many transactions, so the same accumulated depreciation getting reversed and fixed asset vehicle also getting reversed here. This is one. So these four are done now. The bottom four, about two are this one. So you will have some color for this. I'll give you some color. So these two are bank account debited and gain or loss on sale of fixed asset account credited. This is coming from here. Companies Act book, here you gave this one, right? Gain or loss on sale of fixed asset. This one is getting credited, and offset account, they you gave it as bank account when you have posted the transaction. So that bank account will get debited. So that's how you can see this voucher in different parts. But at the end, we are achieving the result that we are desired. So this needs some time to understand, I believe, but I want you to practice it until here, whatever we have discussed today. Come back to me with doubts. Today only practice it or tomorrow morning, and by the time we'll come to the next class, just practice it until there and come back with some doubts or logics if you have identified. Okay. Sairam, is it clear until here?
Yes, JP.
Okay. So Sheila, what do you say?
I have to practice.
Yeah, understood, but I have to practice multiple scenarios.
Yeah, you have to practice. So try it. I mean, try again profit scenario also if you want to. Here we sold it for loss, right? So we can see gain or loss total amount is 8,472. If I would sell for profit, I'll see this one, I mean plus. Suppose if I sell this account for 2 lakhs, suppose again. So I'll see 2 lakhs here. Okay. Then difference between this is 1,527. That it will be my profit. In my bank account also I'll have 2 lakhs, right? When I sell it for 2 lakhs. So like this, I'll have my entry. So here it is minus 527.80 minus value on gain or loss. So it will be a profit. So that's how the gain or loss will be differentiated or represented. So again, I'll change it back to 1,90,000. Okay, one more zero less. Here also I'll change it back to 1,90,000. Right. So try it until here. Tomorrow we'll see one more transaction about the scrap of the asset. So it will be the same actually, scrap also as it is, but just the name will change and the situation will change. I'll explain that tomorrow. Anyway, until here you practice and let me know if you have any doubts. So I have to drop off. Maybe I have work, important work to do. So see you tomorrow, guys. Thank you so much. Stop the recording until here.